Okay, hello and welcome to everybody, and a good evening to you, and morning and afternoon. Thanks for joining. We have Lance, Desi, Atzfar, thanks for joining in. We have many more viewers of the recording of this video, so I want to take the chance to say hello to everyone, even if you are watching the recording of this video. Thanks for joining in today. I'm Giuseppe Basile, also known as the FibStalker, and I'm this individual here on the bottom right here. This is my website, just for your information, just in case you want to have a look at it. It's FibStalkerTrading.com, and particularly I focus on modeling some classes of algorithms that operate on many time frames of high volume markets. And if you want to learn a little bit about this, you can go to FibStalkerTrading.com. So welcome. This is the FibStalker FState weekly show. We are on every week at 7 p.m. EST, Wednesdays on FX Street. I understand for some of you who live in Europe, it might be tough to stay up at midnight. But I also know that a lot of North Americans as well as Asians appreciate this time. And today, as you know, this show is divided in two parts, mainly 2 or 3 parts. The first part is always an educational piece of 15-20 minutes max. And last Wednesday, I started a new series, 10 Steps to Successful Trading. I presented this 10 steps in a separate webinar, and I'll present them again on FX Street as well. And I've received very good feedback about the 10 steps. I believe they make a very good job in laying out what you need to do and who you need to become in order to become successful in trading. And these steps are very practical. I'm a trader. I'm a very practical person. And so I always try to go to the core of the problem, and most importantly, how we can learn something that we apply in our trading. So in the second part, I'm going to review for you Euro, dollar, New Zealand dollar, US dollar, New Zealand dollar, Canadian dollar, and Australian dollar, US dollar. As you know, these markets are all pointing down, and I'm going to give you some ideas on how you can trade these markets going forward. I will show charts and I will give ideas, but you have, of course, to remember that risk management is trader's job number 1. I'm actually adamant and totally mad about managing risk in the proper way. In fact, to the point that I believe that if we manage risk properly in trading, we have done our job, and gains can come or not come. Usually gains come as a consequence of taking a low risk idea and managing risk properly. So I'll show trading idea and charts, and this material is merely provided to you for your general information. Okay, so read the disclaimer if you're watching this recording. Now, this time I won't talk about myself. I will only remind you that I started FibStalkerTrading.com. I have, and I will keep enrolling next year for the FibStalker Methods Coaching Program, which is now changing into FibStalker Methods Express, and there'll be a lot of changes. I'm currently teaching the 5th session. It's going to be in February, March, the 6th session of this program. Very successful program, and I get very positive feedback, and I have people trading successfully as well. And recently I started the Winning with AUDUSD community. I'll talk a little bit more about that later on. I'm active with the Canadian Society of Tech Analysts. In fact, I'm a director for the Toronto region. And it's a non-profit organization, and our objective is to have more people understand and use tech analysis for their decision. These are my contacts and some research paper I've wrote, organization I work with, and so let's get into the content here. This is the educational piece. Step 2 of the 10 steps of successful trading. It's risk and reality of trading. This is very, very, very important. If you like this presentation, you can also tweet it on your Twitter account. If you want a free course to look at during the slow holiday season here, you can go to winningwithaugust.com/start and enjoy the 6 hours video course for you. It's free. So welcome to FibStalker Trading, Simpler Trading for All. And last week we started with our journey to understand what we need to do, what we need to become in order to go from A to B. And we saw that we have to change our belief, behaviors, and routine. If you want to watch that, if you didn't watch that first step, I warmly recommend you watch. It's very, very important. We also learned that trading is not a business. Trading is not a job, it's a business. Trading is absolutely a business. And I also very briefly presented the 7 pillars of trading modern markets, and you can find this open presentation on FS Street as well. And I reminded that everything revolves around trading as a business. We have the mechanics of trading, we have the psychology of the trader, and everything revolves around the fact that we need to treat trading as a business. We fail to do that and we expect an income or a salary from trading, we are going to get into trouble. Ask me why. In the past, that happened to me. So don't just try to make some money, but build skills. That's very, very important. 95% of traders never learn effective skills in trading, and that's one of the reasons, not the only one, but one of the reasons they lose consistently. Now, these are the 10 steps. Last week, we looked at an understanding what it means to actually do and be involved with trading. Step number 1 is understanding the kind of business we got into. And that's very, very important. There are a number of concepts that you have to absolutely, you have to understand in detail. Particularly, we also spoke about the truths and principles of trading. And it took me several years to integrate those truths and principles into my own trading, and that's something that there's no way around it. You will need to adapt your trading system, trading method to that as well. All right. Today we're going to focus on risk and reality of trading. So let's get into it. And the only thing I want to do is just activate my pointing here because I want to make sure that that I can annotate charts later on in the second part. All right, so first of all, as I mentioned before, risk management should jobs number 1. If you believe that the job of the trader is to generate high profits, I think I'll simply say you're not on the right path. And the reason is, and sorry, just let me activate this here and share the screen so that I will be able to annotate and put notes on here. And if you believe that it's to generate big profits, that's not the point. The point of trading is managing risk. Case closed. And the reason is, as you will, if you review and remember step number 1, the market's response to a number of truths and principles. If you don't accept those truths and principles, you are trading an idea of the market does not exist. All right. Now, if you want to stick to those truths and principles, risk management becomes your main job. Otherwise, really, you are trading something which is not the markets as we know them. So as a result, I suggest you develop a profound respect for the market and the risk involved in being in the market. And we can always come back and show some of the charts, whereas if you were caught into them, basically your account would be valued zero if you didn't manage this properly. So minimize risk at all times. That's your job. That would means to manage risk actively, proactively, actually. Minimize risk at all times. So never assume anything in the markets. Remember that anything can happen in the markets, and that's the very first truth about the market. Okay, anything can happen. So if anything can happen, you have to plan for the worst case scenario. Minus 20 times your initial risk, minus 50 times. I know it might seem extreme, right? But the way we structure our money management, it's around this kind of extreme behaviors as well. Because of that, always assume you're going to lose also the full dollar risk at every trade. I risk 1%, and in step 5, I will explain you how risking 1% and then using actively money management can help you to get your trading results. You don't have to generate high percentage return. You have to generate small, consistent percentage return, and then we apply money management to increase that. Okay, so always assume every time you put up a trade that you're going to lose. And I know that might be tough to do for the majority of people who do not have the psychology, have not developed yet the psychology, the right beliefs to be in the market. To be in the market, you have to develop the right beliefs. The market does not work based on certainty, based on the rules that regulate our life. The market has its own rules, and you have to understand them. Another very, very important point, to accept the full risk at every trade. Now, the question here is, well, what's my risk? And I can tell you that a lot of people, many more than what I initially believed, do not even have an idea of how much they are risking. How much they are risking? They don't know. They don't know. So if you don't know how much you are risking, and let's say that you trade one lot fixed. I know a lot of people who do this, which doesn't make no sense to actually take a position of one lot, because if your pip risk change, as it should, because the pip risk has to adapt to the current market conditions, then it means that you're getting very, very different amount of risk. Maybe in one trade you're taking 1%, in another you're taking 5%, because your position size is fixed. All right. So if you don't know how much you're risking, you cannot accept your risk, and you're in big trouble. Okay, that's not how the market works. That's not a right belief to trade the market. And keep initial risk low at all times. Steady gains and consistency are more important than large gains on single trades. And I'm going to show you that on step 5. Okay, so trust me for now. Take every opportunity to reduce risk. I have a technique which I call risk-free trading. It's not necessarily a technique that maximizes gains. In fact, it does not maximize gain, but maximizes risk management. And especially when you're starting in trading, and you don't know all the rules, you don't know, you have not developed all the beliefs that you need to function properly in the market, it is important to adopt absolutely, and keep adopting any device and any trick and any tip that can actually help you reducing risk. Only trade low risk opportunities. I always wait for a confirmation. And particularly my trading, I get the backing of multiple players. For example, you have probably heard me talking about smart money and dump money. I want to have both of them, if possible, agreeing on a trade, because that minimizes the risk that my stop is going to be hit. Right. So as you can see, each and every activity item, sub-process of my whole price analysis and trading process kind of tends towards reducing risk. It's all about that. And again, you can reduce risk by adopting techniques like reducing the initial risk, or using risk-free trading, or trying to identify low-risk opportunities that are backed by multiple players. But you can actually build risk management also within the process that you use to select the opportunities, to select the trading system, and to elect one setup to a valid setup that you're going to trade. All right. So if you have any questions, you can write them down, and as usual, I'll be very, very happy to answer them. Next. One other thing that I do, I always assume that I have not seen the worst yet. And mind that I'm very, very positive in nature. I'm a very positive person. I smile all the time. I have very good relationships, and I'm pretty happy, I have to say. But despite that, I got to know the market and what it means to be in the market. So probably we have not seen the worst condition yet, okay? Which means that we need to keep the risk low at all times. 1929, 1987 crashes, the crisis in 2007, 2008, the flash crash in 2010. I don't know if you were there that day. I was there that day, and it was very scary, actually. I was not trading, thanks God, and you know, I saw something that impressed me. The Swiss franc in 2015, the more controlled, in a way, event like Brexit, at least you know that they are pre-planned, or the reaction at the US election vote, and you know, this surprise will be will have a bigger impact. I mean, events that in the past might have been normal will have a bigger impact in modern markets. Why? Because there is a lot of automation, there are a lot of automated agents, and there is high frequency trading as well, which is very well known to subtract liquidity to the markets exactly when the markets need it, and that generates price swings that were not seen before. That's just one of the events. Of course, there is also higher participations in this market from retail traders, as well as boutique brokerages, banks, and you name it. Okay, so these events are not isolated events. There will be more. Just accept this. If you don't accept this, fine. You do it at your own risk, and that's okay. I mean, it's, after all, it's your money. You can decide, but try to make a smart decision as well when it comes to your future, at least your future as a trader. So if you do not respect the markets and manage risks, this event, make no mistake, will wipe you out. And when the money is gone, the game is over in trading. So there's no other opportunity to start again. You need a life, and you need 10 years and 20 years of savings in order to start again. Okay, so probably, sorry, the probability of black swans, so the far left belly in the bell curve here, are definitely underestimated. I'm talking about the far left, the negative tail. In fact, they speak about fatter tails, which means that the probability of negative events is underestimated. So again, I'm not trying to be negative here. Indeed, I'm trying to be very positive, because my final practical results is to keep you trading, to keep ourselves trading as much as possible. Okay, and particularly if you're starting, as long as you learn the game as well. So I have gains resulting from correct price market assessment with first and active risk management after. It's not about trying to generate a 10% gain. It's about generating a 1 to 3 unit of risk based on how much you risk. And this could be 1%, could be less, could be more. I typically like this for reasons that I explain in step 5. Now, it's not about generating this, it's about generating this very often, and by having a small risk. Because when we were able to do that, and we are consistent, and there are some measures that we will see later on, then we can use other techniques in trading. It's not all about price and methods and setups. Other techniques like money management, very important. The psychology of trading, trading system development and actually looking at more markets, or looking at markets in smaller time frames. Okay. And we have no control on the market, so that's one of the other truths about the market. The market can do anything, and every outcome must be identified and accepted before even entering. Probably some of you have heard that the famous sentence that trading is a battle, or it's a war that you win before even starting it. Right, and that's the whole meaning of it, that we don't have control on the market, so every outcome has to be considered and accepted before the fact. And those outcomes include losing money. A lot of people don't even entertain that possibility. So you have to prefer low risk and steady gains in a longer period to a smaller amount of trades with large gains. A lot of people, want to have large gains very, very quickly. In order to do that, you have to risk a lot. If you risk a lot, you expose yourself to black zone. And so that's not smart, and honestly, it's not the way to go, because we bring back, if you do this, we bring back trading to gambling. Okay. Now, if we want to gamble, let's go to the casino. Okay, let's not call it trading. Trading is something different. In fact, the main difference between trading and gamble, let me tell you what it is. And the difference between trading and gambling is that gambling, it's a game with expectation, negative expectation. Trading is a game with a positive expectancy. Okay, so if you want to trade this and you want to make money quickly, you are actually reducing trading to gambling, in which case it's probably trading is probably not for you. If you want to use trading, which is a game with positive expectancy, because we have rules, money management rules, setups, and we can even unbundle and unwind a trade, something that you cannot do when you buy, when you put your money on the roulette's number. So keep this in mind. Are we trading? Fine. If we are trading, let's treat trading for what it is. It's a trading. It's an activity and a game with positive expectancy. Okay. So remember always this. If there is one thing that I want you to take from this presentation, is risk management is job number one. All the rest is secondary. See, we don't even mention gains here. In fact, gains are a byproduct. If you don't understand this, you're not considering framing trading in the right way. You're not coming from a frame of mind where trading it's a business. It's about managing risk. It's a positive expectancy game, but rather you're coming from the frame of mind where trading is an activity to generate an income, which is as possible, which is going to substitute the salary. So forget that. Trading is about big gains. Forget that. It's about managing risk properly. And trading is actually a positive expectancy game. It's not a negative expectancy game. Okay, so I hope this is clear. Now, I like to keep these rules in mind at all times. Well, I don't have to at the moment, because I mean they're so ingrained in me that I don't need even to think about them. I do them automatically. But some people disregard to protect their precious capital. They take discretionary position. They believe that the market will go in their direction. The reality is that if that doesn't happen, then they lose 20%, 30% of their account. They are not protecting their money. And when you don't protect your money, what happens is that you make an enough big number of mistakes, and your money goes to minus. You lose 90%, the game is over. You lose 80%, the game is over. You lose 70%, the game is over. Okay. And rule number 2, I always pick low-risk ideas. Now, how do you pick a low-risk ideas? Well, there are a number of ways to trade only where other groups of traders are trading. For example, smart money, dump money, algorithms, and professionals. There are ways to identify those areas in advance. In fact, I'm going to show you how we do that in the next section. You heard about plan your trade and trade your plan, but you wouldn't believe how many people cannot just are not able to simply follow instructions, even when I give them, you know, in my trading FibStalker trading signal service, I give the entry, I give the stop, and I give the profit. And what they do, they wait that the market goes in the direction of the trade, and then they enter. So they enter late, and they skew the whole picture. And then when the market comes back, they don't exit. They miscalculate the position. They trade one lot fixed, and so plan your trade and trade your plan. We always hear about it, but you wouldn't believe how many people are not able to do something as simple as that. Okay, even when you instruct them in detail. And finally, of course, discipline and psychology, because 75% of trading is about that. All right. Now, if you have questions, I'm happy to answer questions. If you do not have questions now, what I'm going to do, I'm going to give you my my contact information, so that if you have any questions in relation to this, you can always reach me at, I think I had them here. I don't. Sorry about that. I thought I had my contact information here. For sure, I have it at the end of the slide. So if you have any questions, FibStalker@gmail.com. You can come and visit me at FibStalkerTrading.com or winningwithalgos.com. And don't forget that you can also, during the holiday season, you can access winningwithalgos.com/start and follow these codes and let me know what you think about it. All right. And this concludes the first part. If you have any questions, Lance, Asfar, go ahead. I don't know if Mauricio is here as well. Go ahead and let me know. Okay. So next section, I'm going to review for you live on my charts the euro dollar. So as you know, the euro dollar, and I'm going to show you the chart here. I'm going to remove the dump money, and let's look at this market and what could be happening on this market. Of course, everybody is bearish on this market, and everybody's looking for that that parity now. Parity, everybody speaks about parity, but we have to put things in perspective here. When the market gets to targets, it's not easy to keep pushing them, enforce them. In fact, look at what happened here. With a 50% retracement here from the highs in end of April here to lows in October, and that's the 50% that has traded during the day of the electoral, the day after the electoral vote in US. Okay, this is the US electoral vote. So that market went into the first target, and right in that second target, look at the profit taking that has been happening in the last 2 weeks. This is the weekly chart. Okay, so where is this market going? If this is profit taking, there are a lot of people been positioning themselves at the lows here, looking for this market to just drop like a rock. We don't know whether that is going to happen. However, what I know is that if this market does not do that, very probably is going to retrace into the next extension when the smart money is going to look for this price. So far, it seems to me that this market wants to get into that 106.04. So my recommendation, and it's not a recommendation, it's for you to evaluate rather, is to actually, if the market gets into this area, to time an entry short in this area, and that's the 106. It's not a continuation from the from the lows here. Now, I'm not saying that this could not happen. I'm saying that it doesn't seem probable to me. Also considering how many people are positioned on the short side here. What it seems more probable is that if, and there is an if, the market gets into 106.04, that becomes the short. And in my community, if you come to winningwithalgos.com/signals, so winningwithalgos.com/start, you can get free into the community. And we trade, this is the kind of signals we trade. And we also time this using the FibStalker timing technique, which is a proprietary technique. So the plan here, the trading plan, and if you are capable of trading it, this is the opportunity for you. The opportunity is waiting if this market will get into 106 and then trade into the first target, 102.40, and the second target, which is very close to parity, 150 here. Okay, first target, second target. Is this market going to move like this? It's possible. That's option B. Option A, it's that the market is going to possibly, if it does that, because remember that, you know, we don't know whether it's going to do that. In fact, we are not going to trade this long. We only trade this short if the market gets that. All right. So don't quote me saying that I say to go long the market. No, I'm saying that we don't know and that we have no edge in here. We have the edge here. You understand that? So don't quote me. Some people say, well, if the market has to go there, then it means that I can go long. No, I didn't say that. I say that if the market goes there. So we have the edge here. We have nothing here. Okay. In this area where the market, if the market correct, and if that happens, will be through the smaller time frame or dump more in the smaller time frame, that market will get there. So the edge is here, the edge is not here. Okay, so this concludes the review of the euro dollar. Okay, so before I get into the next one, just want to remind you, actually the next one I'm going to do now a review of the New Zealand dollar, US dollar, okay? And so I'm going to get into the charts here. And now, before I do that, I just want to remind you that if you're interested in one-month trial of the FibStalker trading signals, you can come here to winningwithalgos.com/signals and sign up for a 1 month free. And this is the kind of trades we are gonna look at. So the New Zealand dollar, US dollar. So we had a very similar situation here, and we know where this market is likely to move here. And this market has traded 50% as well. I'm not going to do the full analysis. That's something that you can, if you come to the room, you will, the trading room and the trading signal, you will see the reason why this is moving lower. And the first target is at 68.45, 68.55. And we had here the same situation. And we have a 50% retrace that has traded last week, which as a first target lines up with that 50% level. So I have a small position short here, and my objective is to bring it down to that 50% level. All right, so the idea here is that this trade is always kind of almost completed here. So obviously there would be nothing to do here. So the question here is going to become, what's going to happen when the smart money, which might come into play at this 50%, what they will do. We don't know what they are going to do. In fact, we're going to test that level to see whether there is going to be a bounce. I suspect there's going to be a continuation lower in this market. And if that's the case, I will just try to capture on the smaller time frame this continuation lower, or whether the price gets into that 066,860. So that's a second target for our current trade. The first target is very clearly identified by this 0655, and that's what we're going to do. If this market gets into the second target, we're going to keep trading this market short into 064 here. So it's a very good opportunity because we're going to keep trading this market in extensions, whatever low it prints. And as you can see here, the scenario here is that we continue low. We actually trade the next extension short, and then we do something like that. Okay, and this is not Elliott wave is not. It's a common application of studying a trend using the presence of smart money, which are classes of algorithms on this price. So let's see if it plays like that. It could play differently. If it plays like that, it's going to be really very similar to what we're going to see if we're going to see it on the euro dollar. All right, and this concludes the analysis for the New Zealand dollar, US dollar. So first target, as you now know, is going to be the 064.6550, sorry, 064.50 rather, sorry, 68.50, and the second target is going to be 066.70 here. All right, so that's where I see this market moving to. And this concludes the analysis for the New Zealand dollar, US dollar. Okay, next is the New Zealand dollar, Canadian dollar here. And again, if you like this analysis, please feel free to post them or retweet them on Twitter as well. So New Zealand dollar, Canadian dollar, it's a very similar situation here, and this market is showing the presence of smart and dump money here. You might not see that. This market has been very, very technical here, and we have we had a participation of 50% at the 090.82. Price went into that first target, and then the next measure move failed, which meant that this trend higher was completed, and this market has started trading in move lower into what now it's actually responding to smart money on this time frame, but this trace is not. I don't trust this trace from smart money. I don't think that there's going to be a lot of participation from smart money applying the rules, and on the other hand, dump money here, it's temporarily supporting the 13 EMA is temporarily supporting price. So what could happen is that this support here will push price back into the weekly 13 EMA, and then we could see a continuation lower. And there's going to be also participation of smart money short in this market. So the daily is not really giving a lot of information on what to do next. But when we move to the weekly, we get a lot more information here, and you know, there is a clear structure here. Maybe you don't see it because you don't. You know, when you learn the rules of the FibStalker methods, everything is much easier. But as you can see here, there is an extension short which hit first target. Look at the beauty of this, how algos came in and took profit around this area here, and now it's approaching the second area. It's not yet tested that second area. When it tests that second area, I think we are going to see some sort of a test. There'll be dump money from the daily coming in here as well. So this market could continue higher here, but I believe that it seems more probable that there'll be a test of this level as well. So where is this market moving? Well, long term, this market is going very probably, we don't know the future, but very probably this market is going to retest all the way 50% retrace of the highs to lows to highs. So I'm very interested in getting the next measured move. And can you see that all these markets are euro dollar, New Zealand dollar, Canadian dollar, are all aligned. They're all showing the same patterns here with a further move lower. Some of them, they have areas of strong support. Some of them, like the euro, have nothing below, but it doesn't mean that they're gonna keep moving lower as there was no tomorrow. So they're going to retrace, I believe, before there can be a continuation lower. All right. So this concludes the analysis for the New Zealand dollar, Canadian dollar. Thanks for watching. Okay, next and last market is going to be the Australian dollar, US dollar. And again, if you like my reviews, you can always tweet them on your Twitter account, and that is highly appreciated. So let's look at the Australian dollar, US dollar, and this market too has responded to extension shorts, as I'm going to show you in a moment here. When we look at this market, we had clearly on the weekly time frame here, we had the market responding to the dump money short, and also smart money here, which is an extension short from the highs back in, as you can see here, back in at the beginning of 2014. All this is pushing price lower. Dump money, smart money is pushing this price lower. So this market actually went to test smart and dump money here, the smart money extension short. And this trade, as you can see here, is completed, the first part of it, because the first target was touched to the pip. So if you negate the presence of algorithms, you have to explain the reason why the levels where they take profits are tested so to the tick here. So lows to lows, extension short into that first target. This market could continue lower, and I believe it will. And as you can see, there's a second target here at 0.70. 78 to 70.80 here, and that's the second target. Whether this market is going to retrace first or to continue lower is not given. The point is that in any case, if it retraces, we're going to capture an inner measure move. If he continues lower, we will let him move and capture an extension short, and then we will capture the full retrace in the next measure move. Okay, so this market has completed the first target here, which was 72.30 area, and the second target is at that 0.70, 80, 85. So that's what we're going to look at. And if this market retraces into the 73.10, following a little bit the pattern that we see in the other markets, then there's going to become an opportunity there. And as you can see, smart money is placing really around that previous low. The point is that it's not the low, it's the way smart money actually capture these levels. Okay, the model that we use to model the algorithms that actually trade on these time frames, very high volume. All right, so this is it for this review, and actually this is it for today and for the show. If you like these reviews, please, you can forward them or tweet them on Twitter, and that is highly appreciated. If you are interested in these methods and the way I look at markets, you can always come and visit me at FibStalker.com. I also run a coaching program. November 2016 is the 5th session of my coaching program. Is receiving very good feedback. It's an online course. I also do some offline, as you can see here, but this is an online course, and actually in reality it's not a course, but it's a coaching program where I help you starting from the mechanic of trading down to developing your trading system, adopting one of my trading system, analyzing price structure, analyzing smart and dump money, and then with that reaching profitability first, and then keeping working on your discipline and strategy and psychology, building consistency as well. If you want to get information, just write to me at FibStalker@gmail.com or jump on my free newsletter here, and I'll see you around, and thanks for watching. Next show is going to be next week, so we'll be here on December 28th, and if you're around, if nothing to do, I'll be happy to talk about the step 3 of our 10 steps to successful trading. Thank you very much and have a great one. Bye-bye now.